Welcome, friends, and welcome to another interesting episode of Konexio HighFlyers. Friends, as all of you are aware, these are episodes where we introduce emerging companies from emerging sectors and talk to the promoters, the top managements of such companies. And all this helps us to take a very informed decision. In fact, the best part about this initiative is that we get to know very deeply about the company's business model, the growth journey, and the future expansion plans from the company management itself. And today, friends, we've got another interesting company which is going to hit the capital market very soon. The company's name is NewMalayalam Steel Limited, and we have the privilege of having the promoter and the top management team. We have Mr. Divya Kumar Jain, who's promoter and executive director. Sir, thank you very much for
Hello.
sparing your valuable time with us today. Sir, a pleasure to talk to you. And we also have Sirak Vargazi, who's the whole-time director of the company.
Yeah. Hi.
Yeah. So, sir, thank you for you also for sparing your time. So, sir, first question to you, Divya Kumarji, is if you could share with us basically the broad business model of our company, and what is the
Yeah,
positioning of our company, and how did this business journey start? Was it a first generation business, or it came from your father's side? Please share your business journey so that it can help us understand you better.
sure. Hello, everyone. My name is Divya Kumar Jain, and I'm second generation entrepreneur. So we had a very humble beginning in the year 2017 is when we started this company with one line of production. And as we started growing gradually, every year we started enhancing a product line. And today we have about 3 mills in our factory. When we started, we had about 20,000 square feet where we started, and today we have more than 80,000 square feet of space. Today we are doing about around 72,000 tons. Uh, we are churning around 72,000 tons, which roughly estimates to about 200 tons a day. So we are basically B2B manufacturing network. We have a B2B manufacturing network. And we have dealers all throughout Kerala with about 150 plus dealers. Our major product is galvanized products. So we have galvanized, that's GP pipes and tubes. We also do sheets. We also do trading in coils. So this is broadly who we are, what we do.
Okay. So I think very nicely articulated, sir. Second question to you would be that I think the tube market is growing aggressively because infrastructure in India is growing. So obviously
Absolutely.
this is a product which goes with the economic growth. Sir, in your assessment, if you could tell us, what is the size of the opportunity? I believe you all are largely present in Kerala and coastal Karnataka. If you talk about both these markets specifically, investors would like to know what is the size of the market in Kerala, in North, coastal Karnataka, so that we can get a sense of what is the kind of growth available for us. And later on, an added question to this is, in future, are you planning to expand to other markets also?
Sure. So let me give you a broad perspective first. Let's talk about the global scenario where we are today. So today, China is the largest producer of steel. They produce about 1,100 million tons of steel annually, and India is the second largest producer of steel, where we have just crossed about 100 million tons. So that is basically where the disparity lies. Two, when we see our per capita consumption of steel, the world average is about 250 where kilogram per person, whereas China is about 550. India today also is around 76 to 77 kilogram per person. So we have a huge scope right now as we speak. And also with the infra push that the government is giving in the country, I feel we are in a very, very promising sector. Two, if you look at the market in Kerala, the Kerala market is between 35 to 45,000 tons, uh, particularly for our product that we are specifically talking about. We have seen a growth of about 18 to 20% year on year, and we feel this growth will only multiply as there has been a central infra push. The second point is as the disposable income of people are growing, we feel that people are migrating from MS pipes into galvanized pipe because they feel that the life of the product is higher. And people in the coastal belt really realize that, instead of changing frequently, once they use galvanized products, the life of the product is higher, so they get a better longevity of the product. So we feel as the awareness of the product is growing, there is great penetration for this product, not only in Kerala but also in like coastal Karnataka, coastal Tamil Nadu, interiors of Karnataka and Tamil Nadu. So this is
Okay.
where we see, and it's an extremely promising sector.
Okay. So understood. Divya Kumarji, now in terms of the marketing and the logistics within Kerala, what are the kind of distributors, or what are the kind of touch points you get in touch with your customers, or basically you have maybe a master distributor in Kerala who takes care of all the arrangements. So how does it work on the marketing and the logistics side? How do you cater to customers in Kerala and coastal Karnataka? I mean, if you could add that.
So we have a fairly wide distributor network. We don't do sorry, we have a dealer network where we actually have about 150 good dealers, and only our network is only increasing right now. So we actually supply our products through this distribution network so that it actually reaches all the nook and corner of the state and slowly into other provinces as well.
Okay, fine. So I think this dealer network is basically the foundation or the backbone by which you finally get through to the final customer. So good to know. Sirakji, now wanted to ask you another thing, like in terms of the overall, business, competitive intensity, like basically on the working capital side or maybe on the cash flow side, how is the industry operating? Is it that customers are comfortable in paying on time, or are there normal kind of delays in the business? If you could give us that picture, because this is a highly working capital intensive business, and how have you managed this so well, up till now?
The normal working capital cycle in this industry is 60 to 90 days. And we have two type of customers who gives us payment in advance, and customers whom we give some credit. So these credit customers doesn't get any discount from our side, and this is the normal practice in the industry. And as I said, this is a highly working capital intensive industry. So the normal profit percentage, if you see, it's around 5%.
Divya Kumarji, now tell me one thing that you said that you are planning to, in fact, get into new markets also. But tell me one thing, that when you enter a new market, how much time does it take normally for a company to settle down, to get customers, to ensure that volumes pick up? Like, this is an industrial B2B product. So typically, what is the normal kind of gestation period, when you enter a new market? Like, does it take 6 months, 3 months, or a little more than 6 to 8 months to stabilize and then say that, okay, you all have got a reasonable market share and you all have entered a new territory? Because Kerala and coastal Karnataka are your home grounds. But other markets, obviously, what is the normal time you take to get into the customer's wallet share, increase your volume? So, if you could give us some idea on that.
So basically, let's see where this product is going. So basically, there are about three basic broad categories where we see this product going. One is general engineering purpose, one is for roofing, and the other is for basic infra. Now, thankfully, our product has been accepted well in the market, and also there has been a good reputation for the product. So we have people coming in and asking for the but we have been extremely cautious on how we have to penetrate into these sectors. What are the distributors and the dealers that we have? How do we recognize them? How do we make sure that their territory and their interests are protected? So as we go forward, we definitely there has been a lot of demand from people, but we have always been very cautious on how we have to grow this, and we have to do it very systematically. So there is for us to see this product in terms of timelines. We don't feel that that requires that kind of timelines to penetrate, because this product itself is penetrated. It's about the
Okay.
brand reaching those places. So
Okay.
that is what we have to
Understood.
work on it.
No, I think
Yeah.
you mentioned it rightly that today even tube companies are engaging into a lot of branding and
Yeah.
visibility exercises. So the next question could be that within Kerala, which is a your home ground and where you all are fairly dominant, any competitors which compete with you in this market, or is it a kind of a market where you enjoy a large amount of dominance with very little competition? If you could share some thoughts on this. Okay.
Uh, so to talk about the market, the total market in the state of Kerala is more than 30,000 metric tons, and
Okay.
we are catering around 20% in the market.
Okay.
And rest are all are smaller players, and they are not into it. They are never a competition for our
Okay.
company.
Okay. No, understood. Mr. Varghese. Now, Divya Kumarji, apart from the numbers, what I wanted to understand from you is that we have been in this business for a long time. You said, this is a second generation kind of effort from your side. Tell me one thing, in what way do we add value to the customer so that we get a lot of repeat business from customers? Secondly, I mean, most importantly is the execution good, is the quality of the product good, which is very important. I mean, if you could share two three qualitative aspects for us, that how are we adding value to the customer and how are we doing a better job as compared to other players in the industry?
Right. Thank you so much. That's a very interesting question. So, let's talk about how. So, first, I wanted to discuss on the sourcing side. So, we basically source our products domestically and internationally from reputed brands like JSW, AMNS. And so that gives us the consistency on a standard and also the consistency on the quality and uniformity of the coating of the product. Whereas the competition basically has, they're largely dependent on their own narrow galvanizing, which we feel that the coating is not uniform, and also the quality of the product will keep varying because of the varying sourcing of the raw material for them. So we always buy global for local. So we believe in just in time delivery. As we are based regionally within the state, we are able to give even smaller quantities at faster delivery cycle for our customers, which means that our customers don't necessarily have to stock those products. Whenever they require a product, they could just tell us and we will be able to deliver the product to them on time. So what we also do is we stock the products for them, and this actually also gives a lot of trust in our dealers, who also believe just in time delivery for their fabricators or customers. They are able to promise them a faster delivery. Also that you know uh, we are able to do this as the we are not dependent on any other source of transportation or anything of that sort, because there's no other hindrances. We are lying regional in our place, so there should not be a problem for us. So we are able to give them more value add for our product.
Okay. Okay. No, I think understood. So it's a very properly well-defined package in terms of quality, in terms of the sourcing of the raw material. So I think the
Yeah.
customer gains and you also benefit from a regular kind of sustained relationship. Mr. Varghese, now coming to the financials, if you could share with us the latest financials for FY24. I believe the year has been good for us. So first of all, if you can share the numbers and then tell us, sir, what has been the main reason for this improvement?
Yeah. So FY24 was a challenging year for the steel and the construction industry. It was the first time we could see a small drop in our revenue. But the current year, the half H124 is a very promising year, and we were able to perform well in this year. To talk about the numbers, uh, in March 24, we have a total revenue of 303 crores, where the PAT is around 4.26 crores. The EBITDA percent is 3.4%. But
Okay.
when we come to the first half of this year, September 24 figures, our total revenue is 155 crores, but our PAT rose to 5.2 crores, and the EBITDA is around 6.2%.
Okay.
So if you can see that the previous year the EBITDA was lower and current running year the EBITDA is much higher. It's around,
So
it's
any
more than
specific
6%.
reason, Mr. Varghese, for this improvement?
The
More
main
volumes or
reason
better
for
product
the
mix?
main reason for this is the previous year, as I told, it was a challenging year. The prices of steel came down by around 35 to 40% in the market, which affected our business as well. Now the steel prices is on the bottom line and it started rising slowly. So we were able to stock more raw material in the bottom line figures. That's the main reason why this EBITDA in the present year is rising. And we believe that this continues in the next half also.
Okay.
So usually in the steel industry, if you can see, this is a normal cycle where the prices gets corrected once in every 6 or 7 years. And previously this happened in 2006, 15 or 16, if I believe.
Okay.
So we strongly believe that the future of this industry is bright in the coming years.
Okay. Understood. I think, thank you for the information. Sir, another question now, which is important, from the point of IPO. If you could tell us, Mr. Varghese, what is the IPO size and what is the main objective of raising money from this IPO?
Okay, so from this IPO, we are issuing a fresh shares of 46 lakhs 40,000 shares, and the price band we are planned about in between 85 to 90. The IPO is starting on 19th of this month, and
Okay.
the main objectives of this IPO. First one is IT and technological upgradation of existing manufacturing facility. Then uh, the expansion of the existing solar facility. We already have 500 kilowatt of solar power. We are adding another 500 so that our total generation will be 1 megawatt. Then we are also constructing a new factory shed in our own factory premises so that we can store more finished goods and increase our capacity utilization. We are also investing on brand building and advertising into other states as well so that we can increase our sales in other states and become a national player.
Okay.
We are for that we are for our incremental working capital requirements we are allocating some money from this IPO.
Okay.
Rest of the amount goes into IPO related expenses and general corporate purposes.
Understood. So even the solar facility will get operational, you're saying?
Yes.
Okay, and typically, just to understand, the benefit from the solar facility, typically, what is the kind of power cost on an annual basis for us? Because if you put up solar, obviously you will save some money in terms of your
Yeah.
power cost. So, what kind of cost savings can the company expect going forward? Any rough kind of calculation?
So to talk about solar, currently the solar generates around 20 to 25 percentage of our total requirement. And if you can see recently also the government is always planning to hike the electric power cost.
Exactly.
So looking forward in the future, if you can see if the power cost only will rise, and if we are investing on solar in a early state, we'll be able to move more money into our profits.
Okay.
By adding this new solar facility, around 45 to 50 percentage of our total requirement will be harnessed from the solar power.
Okay.
From the
Fine.
solar.
Understood. So, I think significant amount of cost savings. Sir, now just wanted to understand the business proposition. Like when your top line grows, can we expect that in terms of your top line growth, the obviously the EBITDA margin can also expand? Is it a business which is entirely dependent on volume growth? Like as your volumes grow, your EBITDA margin also improves because you said in the first half EBITDA margins have improved, bottom line has improved. So can we assume that if more volumes are sold, you get into more new territories? This margin expansion, there is reasonable good scope for us.
Yeah. So in this steel business, if you can see, once the production increases, our costing reduces. So once we are able to increase our capacity utilization, it will adversely improve our profitability margin as well. So we can, so as you said, if we grow into other markets and expand our capacity, we will definitely be able to increase our EBITDA margins as well.
Okay. So I think good to know that, so that there's a decent amount of operating leverage also which can come in. Divyakumarji, last question now for today. Sir, we just wanted to understand, in our business, which is a B2B business, sir, what is the main risk in our business? Like, after COVID, thankfully the economy has picked up. I think economies are, Indian economy is now growing very rapidly, and infrastructure, as you rightly said, is also being the focus area of the government. But in our business, sir, what is the most important risk? Is it the raw material risk volatility, or is it the execution risk? You have handled this company for a long time. Tell us, what is the most important risk, and how is this risk managed at our company side?
See, first and foremost, the biggest risk that we feel in this industry is basically influx of products from uh, out of India, which is it actually impacting the domestic market. That we feel now, but the government has actually taken stands, and they're going to put safeguard duties and things like that, which is definitely going to that is going to actually benefit the domestic producers. Two, I feel geopolitical issues actually also impact us a lot. Be it because of geopolitics, if the oil prices, they have a lot of variations. We have seen raw material prices actually having huge fluctuations during just after COVID, during the Ukraine-Russia war. That actually had impacted our top line and bottom line together. At when this sudden spike or fall of that is fluctuations in raw material prices affect the industry as a whole, and that is how that those are the two major risks that I see. Otherwise, I feel we are in a great trajectory at this point of time. We feel the next 10 years is for India, the next 10 years is for infra, and the next 10 years is for steel. There is no two ways about it. Apart from these two things, we feel we are in a extremely, extremely great trajectory.
I think very nice to know that, and I think you rightly mentioned that the runway for growth, is extremely positive and very long. So apart from these two factors, if you manage your risks well, growth opportunity is definitely quite good. So anyway, sir,
Yeah,
thank you very much.
those two things
Accept
are
my
not
best
in our
wishes.
hands, sir.
Yeah, yeah. No, but accept my best wishes, sir, to you, your entire
Thank you so
management team,
much.
and thank
Thank
you
you.
very much.
Thank you. Thank you.